Hello everyone. For today, I will discuss about the complete QuickBooks setup to make the company file ready for the users or the accounting and bookkeeping staff. I will focus on the beginning balances since I have already discussed the other steps in my previous videos, but I will put the links in the description box below. In entering the beginning balances, you will need an accounting background or you should have your accountant with you in setting up the beginning balances of your company file. Okay, so let's start. These are the steps in the complete QuickBooks setup. So the first step is installing QuickBooks. So first you have to download the installer from the website of QuickBooks of Intuit, or if you have your CD with you, then you can just double click on the installer, run the installer, and then put in the license number and the product number. Then just follow the on-screen instructions. After installing QuickBooks, the next step is creating the company file. So again, in creating the company file, you will just have to follow the on-screen instructions based on your company's line of business or your industry. Step 3 is entering the name list. You have to input your customer names, your vendor names, the chart of accounts, or the inventory if you have any. And the fourth step is setting up the beginning balances. So this is what we're going to do today to set up the beginning balances of your accounts in your chart of accounts. So after entering the beginning balances, the last step is actually not the last step because we will now be entering the daily transactions to QuickBooks. So once everything is entered to QuickBooks, you will be able to do your bank reconciliation and then provide the management with the financial reports. And these are the important points that we need to know before we set up the beginning balances. So if your business is already up and running, you need to choose a cutoff date. If it is a new business, then we will use the date of the incorporation or the start date if it's a sole proprietorship. The cutoff date is the date that we're going to use for the beginning balances, except for the accounts receivable and the accounts payable. If you would like to have a detailed aging reports, then we need to use the actual dates of the invoices or the bills. Then the date after the cutoff date is when we're going to start entering the daily transactions in QuickBooks. So next is we will need a balance sheet report based on your cutoff date. An income statement is optional because if your cutoff date is the end of the calendar year or the fiscal year, then the net income is already added to the retained earnings. So if your cutoff date is not the end of the year, you also have the option to input the income and expense balances to QuickBooks as a whole amount. Then QuickBooks will automatically create a net income account in the equity portion of the balance sheet. If you don't want to put the income and expenses, then we have to manually input the net income figure to QuickBooks. We will do that by creating a journal entry. Third is we will create journal entries or import the beginning balances to QuickBooks using the import function in the chart of accounts, except for the accounts receivable, accounts payable, and the inventory because we will use the copy and paste from Excel function to import those transactions. The fourth important point is the bank balances should be the bank balance, not the book balance. This will make our first bank reconciliation easier. Fifth is the outstanding checks should be added back to the bank balance and to the accounts payable. The deposit in transit should also be deducted from the bank balance and added back to the accounts receivable. Number 6 is if your business is already up and running, we should have a schedule for accounts payable and accounts receivable. If you want it to be detailed, then you can put in all the individual invoices for each customer or vendor with the invoice date and terms. So if you have a very long list of accounts receivable and accounts payable per vendor or per customer, you don't have to worry because you can copy and paste it from Excel to QuickBooks. It's very easy. We just need to follow the format in the Excel file. Number 7 is for inventory, we need the item names, the description, the quantity on hand, and the cost for each item. We can also import those to QuickBooks in an Excel file through the copy and paste function. Next is the opening balance equity. So the The opening balance equity is very important in setting up the beginning balances in QuickBooks. It is an automatic account created by QuickBooks, and we're going to use this as an offsetting account in entering all our beginning balances to make sure that everything is balanced. After all are entered and balanced, we will then zero out the opening balance equity by creating a journal entry and distributing the amount to the actual equity accounts. Our main goal and our basis for a successful QuickBooks setup is when our balance sheet in QuickBooks is equal with the balance sheet that we initially prepared for setup. Okay, so now let's start entering the beginning balances in QuickBooks. First is I will show you the balance sheet report that I have initially prepared. So this is our balance sheet report. Okay, there. So the business that we're going to do today is an up and running business. It's already been in business for a couple of years, so that's why we have a very long list of a balance sheet. But if it's a new business, it's very easy to do the setup since you only have the bank account, the equity accounts, the other assets to input to QuickBooks. So you don't have any beginning balances for AR, for AP, for the inventory. So it's very easy. But for this tutorial, we're going to use a very long balance sheet report. And the cutoff date is September 30th, 2021. Okay, so I'll go to QuickBooks. The first thing that we're going to do in entering the beginning balances is to set up or to input the accounts in the chart of accounts, then the beginning balances, except for the accounts receivable, the accounts payable, and the inventory. So I'll go to QuickBooks. This is the icon for the chart of accounts. I have actually entered all the balances in QuickBooks, but I'm going to show you how it is done. I'll click the chart of accounts. So to add a new one, just right click anywhere and then new, or the shortcut is Control N. I will add a bank account. These are the types of account that you're going to choose or to add, and I'm going to add bank. I'll click continue. And I'm going to add a Metro Bank account. The other information are optional, and I will click this button for entering the opening balances. The balance is 5 million and my statement ending date or my cutoff date is September 30th, 2021. I'll click OK and I will click Save and Close. Okay, so as what I have mentioned, the offsetting account for all the transactions in QuickBooks or for all the beginning balances transactions is the opening balance equity account here. So all of the transactions, debit or credit, the offsetting account is the opening balance equity. Let's check the journal entry for this. I will double click this again and click this, the 5 million transaction. I will press Control Y so we can see the journal entry. So there, it's a debit of 5 million to the Metro Bank account and the credit is opening balance equity of 5 million. All right, there. So next is we're going to input a beginning balance using the journal entry. So I will right click anywhere, new, and then I will add another bank account. So this time it's for the Philippine National Bank and I will leave the other information optional. I won't put in an opening balance amount because we're going to do that using a journal entry. I will click save and close. So you can do a journal entry if you would like to input first all the accounts in the chart of accounts without any beginning balances. And then you would like to do a big journal entry for all the accounts and then offset using the opening balance equity. So I'll go to company and then make general journal entries. The date is September 30th. My debit account is Philippine National Bank and this is the amount. The memo is opening balance. And of course, the credit account is the opening balance equity. Right there. I will click Save and Close. So that's how you input a beginning balance using the journal entry, right? So for the other accounts here, what I did is I actually make use of the import function in QuickBooks. And this is our Excel file here. So what I did is I started with the bank accounts and then the current asset accounts and then the fixed asset accounts because it's a long balance sheet report. So I want to make sure that all accounts are entered properly. Okay, so and I also have the liabilities account in my second import, and then I have the income statement accounts without the amounts right there. Okay, so I'll go back to QuickBooks. What I actually did is I clicked account and then import from Excel. This will ask you for the location of the Excel file. This will ask you if your Excel file has header rows, and it will ask you for a mapping. And then you can click preview to make sure that all transactions are correct. And then you just click import. After clicking import, all the account names with the balances will automatically go to QuickBooks. So you don't have to manually type the accounts and the amounts. I have the link for the video on how to import the chart of accounts with the beginning balances in QuickBooks. Okay, I will click cancel. So now after we have already entered all the accounts with the beginning balances, except for the accounts receivable, accounts payable, and the inventory, the next thing that we're going to do is to input the inventory list with the description, the quantity on hand, and the cost each. Okay, so going back to QuickBooks, this is the icon for the items and services, or the icon wherein we're going to input our inventory. I will click this. Okay, so as you can see, we already have the inventory here, but I'm going to show you how to import an inventory account. Just right click anywhere and then new, or the shortcut is Control N, and we're going to choose inventory part. This is the inventory name. This is under the sub item of this. Okay, and the description is Univar 500. I'll copy the description to the sales description. This is the purchase description, and this is the sales description. The cost is 3.21, and it goes to the cost of goods sold once sold. I'll leave this optional, and I will also leave this as optional. It's vatable, and the income account is sales. The asset account is the inventory asset account, and I have 1,813.1216 on hand, and the total value is 5,820.12. And the as of date is September 30th, 2021. Okay, I will click save and close. So that's how we input the inventory account one by one. But if you have a very long list of inventory, then what you can do is you can copy and paste from Excel. Just right click and then add edit multiple items. Okay, there. So you should have an Excel file, and your Excel file should be exactly the same columns as what you have in QuickBooks. And this is my Excel file here. Okay, so I have the item name, the descriptions, sales description, purchase description, quantity on hand, the cost, and the as of date. So just make sure that your columns are exactly the same as what you have in QuickBooks. And then once you're ready, just click here and then paste the information from Excel to QuickBooks. So I will put in the link below on how to do that. Okay, I will click close. Okay, so we've already entered our inventory to QuickBooks. The next step is we input the customer names and the balances for each customer. So I'll go back to the home page, and this is the icon for the customer center. You can also click this, or you can also click here and then customer center. All right. Okay, so to add a new customer, so just like the chart of accounts and the items and services or the inventory, just right click anywhere and then new customer, and then put in the customer name. And then very important thing is you don't put the opening balance here because it will go to uncategorized income. So don't touch this. And then we can leave the other information optional. But if you would like QuickBooks to be your database for the customer or the vendor information, then you will have to input the information here. also the payment settings, sales tax settings, any additional info, the job info if you're a construction or a contractor line of business. I will click OK. All right, so that's how we add customer names. And if you have a very long list of customer names, you can also copy and paste from Excel. So just right click anywhere and then add, edit multiple customer names or jobs. Here, and then this is my Excel file for my customer names. Okay, so it's very long. So just like the inventory, you have to make sure that the columns in QuickBooks are exactly the same columns as what you have in Excel. Once you're ready, then just copy from Excel and then paste it to this window here in QuickBooks. Okay, you paste it on the last portion. And so once it's pasted, it will go to the QuickBooks database and all of your customer names are already in QuickBooks. So next is we're going to input the opening balance for our customers. So before we will do that, I'll go to the items and services icon. So this is where our inventory is. So a very important thing in entering the invoices or the beginning balances for the customers is you need to create a service item in QuickBooks, which is called an opening balance. So I will right click and then edit. So we can see the type is service, and then the item name is opening balance, and then it is linked to the opening balance equity account in QuickBooks. Tax code is exempt. It should not be VATable. So we do this because once we create an invoice, it will debit accounts receivable and then it will credit the opening balance equity account. I will click OK. So I'll go to the home page and then I will create or I will input a beginning balance for one customer. So create invoices. And then the customer name is 3J Corporation. The date is September 30th. Invoice number. And the other information are optional. And it's better to put in the terms, 30 days. I'll change the date to August 5th because this is the actual date of the invoice. The quantity is blank. The item code is opening balance equity. So this is what we're going to use for all the invoices that we're going to create for the opening balances only. And the amount is 6,337.60. And this is VAT exempt. I'll click save here. I'll click yes, and then just keep the number. I'll press Control Y so we can see the journal entry. Okay, so as you can see, it's a debit to the accounts receivable of 6,337.60 and then a credit to the opening balance equity account. There is no sales tax because it's already recognized before the cutoff date. So that's how we input the opening balance of our customers if we're going to do it individually or if you only have a few customer balances to input. But what if you have a very long list of open invoices for the customers? Of course, it's very tedious if we're going to do it one by one using the create invoices icon. So what we can do is we are going to import or we're going to copy and paste from Excel. So we do that from here, accountant, and then batch enter transactions. So this function is only available in the accountant version in QuickBooks and the enterprise versions. So the transaction type is invoices and credit memos. So again, since we copy and paste from Excel, our columns here in QuickBooks should be exactly the same as the columns in our Excel file. So this is how my Excel file looks like here. Okay, so it's really very long. So just copy and then paste here in QuickBooks. Once everything is pasted, just make sure that all the total charges and all the total credits are exactly the same as what you have in your Excel file, and then click Save Transactions. So I will put the link for the video in the description box below. So that's how we input the beginning balances for our customers. And next is the fourth step is to input the vendor names and the balances for each vendor. This is the link for the vendor center. You can also click here, vendors, and you can also do it from here, vendor center. All right. So just like the customer center, just right click anywhere and then new vendor and then put in the vendor name, max if you will. And again, you don't put the opening balance here because it will go to the uncategorized expense account in QuickBooks. So we will do that using the bills or the import function in QuickBooks. The other information are also optional, but you can fill this out if you would like QuickBooks to be your database for the customer list or the vendor list. Okay, I will click OK. All right, it's there. And then if you have a very long list of customer names, you can also copy and paste from Excel. So just right click anywhere and then add, edit multiple suppliers. And this is what my Excel file looks like. So just like this, I have the address, telephone number, the vendor email, and any other information that you would like to include in the vendor center. Okay, so once you're ready to copy, and then you can paste it here at the last part. Okay, and then click Save Changes, and all of your vendors will be uploaded to the QuickBooks file. So you don't have to do it one by one, especially if you have a very long list of vendors in your database. So next is we're going to input the beginning balances for the vendors. Okay, so to input the beginning balances is we click the Enter Bills icon, this one, and then put in the vendor name. And the date that I'm going to use is July 30th. I'll leave this blank, and the amount is 28,146.43. Terms is very important for the aging reports. I'll leave this optional. And the expense account, which is really not an expense, is I'm going to use, of course, the opening balance equity account right there. Okay, so this will go to accounts payable and then debit opening balance equity. I will click save and close. I will click yes. Okay, so that's how we input the beginning balance for our vendors one by one. But if you have a very long list of accounts payable to be entered to QuickBooks, then we will do the batch enter transactions just like the invoices for the customers. So we go to accountant and then batch enter transactions. And then this time, we're going to choose the bills and bill credits. Okay, there. So again, the columns in QuickBooks should be exactly the same as the columns in our Excel file. And this is how my Excel file looks like here. So it's very long, but you don't have to worry because you can just copy this and then paste it here in QuickBooks. So just make sure that the total charges and the total credits are the same amount with what you have in QuickBooks. So once it's equal, then just click Save Transactions. And then all your accounts payable will be uploaded to QuickBooks right there. So that's how you enter the beginning balances of your accounts payable to QuickBooks. I will also put the link below on how to do that. We have already entered our beginning balances. So the next thing and the last thing that we're going to do is to distribute the opening balance equity account to the actual equity accounts. Okay, so I will run a balance sheet report. So reports, company and financial, and then balance sheet standard. Okay, so let's check. This is my balance sheet report. Okay, so my total current assets is at 39,183,926.76. Let's go to QuickBooks. Okay, so my total current assets is equal 39,183,926.76. My fixed assets is at 34,329,365.13 to QuickBooks, so it's exactly the same. And how much is my total assets? So 73,596,996.69. Okay, here. So it's exactly the same. And my total liabilities and equity accounts. Let's go to the current total current liabilities first. 35,193,970.71. Okay, here. Okay. So exactly the same. 25,193,930.71. And my long-term liabilities is 6,155,055.12, and then the total liabilities is 31,348,985.83. Let's check our Excel file. Okay, here, so it's exactly the same, 31,348,985.83 0.83 cents. Okay, so and then our opening balance equity account is 42,248,10.86. Okay, so exactly the same, which is the total capital. So the next thing that we're going to do is to distribute the opening balance equity account to the actual equity account. So these are the actual equity accounts. For the net income, we didn't input the income and expense account, so we will just manually input the net income amount at 6.3 million. I'll go to QuickBooks and we're going to create the journal entry. Okay, so I'll go to company and then make general journal entries. So the credit amount is capital stock, 4.750 million credit, and I will put in a memo to distribute the opening balance equity account. The next account is premium on capital stock, which is a credit. Next is the retained earnings. Okay. And then treasury stock, which is a debit of 1.9 million. Right. And then our net income. Okay. And then our opening balance equity account. I will change the date to September 30th. Okay, so we're ready to click save and close. And this is for the retained earnings. I'll click OK since this is the opening balance. All right, so let's check our balance sheet report. Okay, there. So net income, premium on capital stock, treasury stock, capital stock, retained earnings. So it's exactly the same as what we have in our balance sheet in the Excel file. It means that we have successfully entered or we have successfully set up our QuickBooks. So now our QuickBooks is now ready for the end users or for the accounting and the bookkeeping staff to use. But before we'll end this video, I'll go back to the chart of accounts and then go to the opening balance equity account. So you have to make sure that it is zero. The opening balance equity account should only be used in entering the beginning balances in QuickBooks. So since we have already successfully entered all our beginning balances, this opening balance equity account should never be used again. So what you can do is you can right click and then make this account inactive. Okay, so we have to hide the opening balance equity account so that it won't be mistakenly used by the other users in their entries inside QuickBooks. All right, there. So we have already completed our setup in QuickBooks. Your QuickBooks file is now ready for use. All right, so thank you so much for watching and have a great one. For more QuickBooks tutorials, tips, and tricks, just subscribe to my YouTube channel. Thank you.